Welcome to TradeTheMBI.com. This is John. This report is for the 10th of July. Well, we're still in this Fed easing of its balance sheet that still gives us opportunities for the supports, and then boom, the letdown to repeat again. We're still hanging right above that 76% line. Not a great DOC. We still have the improved red from the -7 range. We had some short-term buyer interest, but you also saw shorts increase at the same time, and a softness in midterm buyers. So we're seeing that in the rollover here of the shakeout. Anything dramatic as far as significant widening break or acceleration, not showing yet. Not like you get here where you see a dramatic dip up and down, and that kind of play. This is that soft orange where it hasn't spiked or given any indication that there's a dramatic shift of any kind in algo activity. So we're just going to get this back and forth. You can see how much healthier the NASDAQ is. Huge difference, but also starting to have that warning sign. And if the NASDAQ starts to come back a little bit within this ride, it's got to go to that 10.3. So, it's a 300 point decline for there, but that would be more significant and probably accelerate the S&P's pullback setup. From a euro standpoint, no change at all. Again, we are sort of in this holding pattern. Everyone's waiting for stimulus. Getting another little mini reading of super softness here in oil, even though we'd already had the DOC spread that was back here, and it's grown wider, but you still have a full steel reset. We are dipped below the red line at the highs, so it's not going to take much of an uptick to cause that to be some significant short cover within that construct. And of course, gold still pushing for more. Of course, a little softness here with that steel coming down, but the shakeout's still excellent. We'd expect to see a bit of a rise in gold here, and without it, it's a little bit of a warning sign on the overbought setup with the positive extreme, though that's already been filled from yesterday. You still have to look for those short-term buyers to kind of lift things back up, because it doesn't take much now to have a complete collapse of midterm buyers, additional shorts, and then boom, you get DOC spread. So we'll keep looking for that. All we saw from an S&P standpoint, though, mostly was after the highs that had been achieved from the previous day. We had a little softness and then a return back up, which just was met by further DOC spreads here with the cyan popping above, green dipping below red, red below white, and then boom, the cascade. And what was interesting is we didn't get the orange dip until all the way down over here, and this one was okay to start with. It just quickly rejected, and the failure of steel reset shows you why those are usually short-lived pops. In fact, even down here when we got the rising red DOC, it was getting closer to breaking the -13. Same problem. You do have the buy configuration when you're popping above that +13, like even back over here. But in this particular case, when it comes back down, you've lost all your momentum. And unless you're getting a significant rise in your DOC red and well above that -13 in most cases. And that's what started to happen over here as we finally built up and then created that final one, which took place right over in here. You still didn't have a reset, so the real probability is that it was likely to be short-lived. But what happened was, once you got above the 50%, you ended up with cyan moving below red, and in that particular case, you knew that it was going to continue from there. So that stayed pretty good, because what I like to look for, particularly when you get these matching points, is that critical green moving above cyan. And if it doesn't, then I'm really expecting to see some strength out of the DOC steel. And it's literally what you got when you were right over here. You ended up with the cross below, then the cross back up with the dip. So you have all the proper cross points at the same time. And then you're looking for this particular case for the takeoff of the red DOC in that. And it was pretty consistent all the way through there. And once we got back up, though, to the peaks, which is just to to say that we were between the algo levels that had been pre-established. Couldn't top back above the 54, went back to the 40, bounced around that for a little bit, but once the 40 broke, then there was nothing until we got down to the 15, which is what we had just hit, and then we just witnessed a nice little buy setup right there, and it's done okay. It's starting to show a little bit of softness right now. It didn't quite get overbought, but came near to it, and so we'll probably come back to that, or at least a portion of the 31.15 range before they're able to propel it back up. But we're still right within all of these previously listed algos. We had a series of new ones that came in with this setup right here. So it really started with this candle right in between, and it kind of gives us a intermediate one. I'll probably put it up there in the 24 range because it's still almost 10-point difference. But there was that, and then of course the next one's going up, but those were all filled pretty quickly. So I usually like to see ones that aren't filled as having a little bit more significance that way. As always, though, I will update any charts on the Skype chat. Enjoy the weekend, and we'll be ready for trading next week.